Hello everyone, welcome to the pre and post week session. I'm doing this for YouTube, not Instagram. They don't last very long on the story, and a lot of the followers have asked if I would do it on YouTube so we'd have constant availability of the video, which has spent me all Saturday afternoon to fix and get done, as I'm not highly technology advanced. But so yeah, let's get right into it. Those who follow me on Instagram will know that we took a short last week on an RTO and I was initially stopped out. And the reason I was initially stopped out because I didn't pay close attention to the Euro GBP pair. I don't tend to pay a lot of attention to that, and it's to my own demise that I don't. Now, I'm just going to do a little bit of post-week analysis on that setup, and then I'm going to go into some pairs that I've marked out that could be potentially profitable this coming week, pairs that I've never traded before also. So those who follow me on Instagram will know that I follow three basic rules: a swing high on the daily or a swing low on the daily for bias, a market structure break on the hourly, and a return to origin on the 15-minute or the 5, sometimes even 30, but 15 seems to be my go-to. So the reason I took this trade and the reason I got stopped out, which I will show, is that we used a fractal indicator to confirm a swing high here. And I want you to try and ignore these three candles, which was the Friday, the Thursday and the Wednesday. What I saw was a stop run of the 31st of October highs, a low, a high, and then we started to decline. The reason I didn't really want to get involved any earlier than Wednesday at the latest was due to the fact that we didn't close below this candle. I didn't get given the fractal swing high in order to go short, so we had to wait until the 20th of November where we got to close below this last bullish candle. Once I got that, I was comfortably bearish on the pound. So let's just get rid of that. Now if I go into a 1 hour chart, before that even happened, I marked out a 4 hour market structure break as well as the original hourly market structure break, which I believed happened at this level. And as we move along, I already had my target levels set up. As we move along, I made a very unusual mistake, picking the wrong return to origin block, which I used stupidly here. And the reason I used that is because I believe that the origin block occurred here. The down move occurred from this last order block. But that's not incorrect to a point. But what I don't like, and what a lesson I learned this week, was we have these strong wicks above the order block, which means that sellers got involved here. Now what I should have realised, which I did the second time around after I got stopped out for a one hour loss, is that this wick was, if price would have fell at this order block where I had originally wanted it to fall, then that would have been the origin block. But sellers got involved here at this wick and left a fair value gap from here to this order block. Now 9 times out of 10 I would have seen that and been onto it and had my level set at the right level here. I decided to sell stupidly here and got stopped out. If we take that away and then I re-evaluated my situation, I could tell that this was the correct RTO after we broke market structure, because the fair value gap needed to be filled. And once I got back in, I had a 20 pip stop loss, which is quite high for me. I usually try to look for 10 to 12 and take my chances with that. But the risk reward was so great that I was happy to take a 2 hour stop loss, and we've eventually, this is Sunday, so the price range so far from the entry point, we're at 130 pips. So you know, the risk reward ratio was absolutely fantastic, but there's a good reason and an easy reason why how I could have avoided the loss on here. And if I go to euro pound, as we can see, we created the swing low on the daily chart with a confirmed run on stops. We broke the market structure on the hourly. And now we have came back down, ran the stops into a 60-minute block. If I would have followed Euro GBP's price action, a return to origin, clear as day setup, would have showed me that I needed to wait for my entry to this level. The equivalent was I got in on the pound at this level. That's why I was stopped out. Sometimes checking the euro pound will be very, very beneficial to people who trade the euro USD and the GBP USD against the dollar also, because it gives an indication of which pair is actually most likely to be the strongest. So in regards to the dollar index, from a daily point of view, this is my chart. I have it already mapped out. This has been mapped out for well over 2 to 3 weeks, and I'm quite comfortable in saying that I don't think I need to change much in regards to how I see the pound. I think on a daily perspective we've got a confirmed swing low there, so you could use your market structure right there. I like these ones here because price could have easily created a lower low, higher low at this order block or this order block and rallied up to take the stops. We broke market structure at this particular point, so I see that as a day higher time frame return to origin, which I see as here, and they're solid bullish candles. So as we go into pre-week analysis, I would like to say personally that these are only my views only. This isn't buying or selling advice, currency advice. This is just me trying to give back what I've studied for the last 2 to 3 years after finding the inner circle trader, whose teachings have been unbelievably important to my development, understanding price action. All I've done is take 3 simple rules, merge them into one, and tried to come up with a strategy that would be more profitable than losses, and it seems to be the case. Now, the way I see things at the moment is I believe that we've broken market structure from a 4-hourly perspective and we've filled voids. It looks to me like we've used this 4-hour breaker instead of this return to origin block. Now, I would still believe that we could still use this level, but the only reason I don't think we will is because we've broken the structure on the 4-hour here and created a higher low, and I think we're going to repeat the process around these levels. So for me, there's liquidity pool above. We're looking at 13th of November. I believe we're going to return. False move Monday down, an hourly chart, I'll be able to see properly. Breaking market structure, order block, and I believe we are going to see a false move down and continue our bullish run on the dollar index. That's how I feel for the week coming, potentially for the next 2 weeks. In regards to, I don't really trade fibre, so I'm not really going to go into that. I may do later on in the video, just as purely for study purposes, but as the way I see it, I'm still actually in this. I'm not far from my profit level, which was 128, 155, and I believe we have a daily order block to touch. So I will be holding this. I've already took 70% off the trade. I believe we're going to see some sort of pullback, probably to this order block, potentially even here, and then resume our downward situation. That is the RTO as a setup. I will be doing a separate video on the return to origin and the phase 3, 1, 2 and 3 rules, as I did do an Instagram live based on that, and it went down pretty well with followers. So I will be doing a more detailed RTO breakdown and putting it on the YouTube channel probably mid to next week. Let's just check this is still recording. So purely based on how I see the pound, I would say we are still very much bullish dollar. From a daily perspective, if I just zoom in, if this bullish order block breaks, gives way, then I believe that first thing we will do is we will fill this void, fair value, and this low be taken. If this low is taken, this was support level, I just call them order blocks as ICT influenced trader, then possibly we could fill this fair value. I do believe there's a possibility that we could drop off, fall off a cliff on the cable. Even the GBP JPY looks like it's ready to fall off a cliff. I probably, at this moment in time, wouldn't want to be a buyer in the pound. So I probably wouldn't want to look to be a strong buyer on the pound at the moment, but that's just how I see it going into November, the end of November, and we probably could look to see this as a market structure break also, a lower high. We may see a high of the week form around this 4 hour block, and I will be paying close attention to this level, potentially Wednesday. If price just decides to fall, then there'll be no trade for me, and I'll just hold the shorts, because sometimes you're not going to get a trade every week. That's just the way it is. People that can't seem to accept that fact. It's to their own demise. They just can't hold themselves off. They need to be involved in a trade. It usually ends out really bad, and they wonder why they can't get this game or understand its the physiology and the psychology of why they lose, because they're probably greedy, and they're also probably suffering severely from FOMO, fear of missing out. And that's basically the two reasons why the psychology is poor, like mine was at one time, and the FOMO set in, which it did for me and still does to a point. But that's my view for pound, so I'm just going to arrow this out on how I think we're going to see it. I could be wrong, I don't really care. because no one's getting 90% correct in this game. Let me tell you that as a fact now. No one is. And if you believe that they are, or they're telling you they are, then they're lying to you. So that's how I see cable going into next week, guys. Personally, I do believe we're going to see this low taken. Potentially this low as well. 8th of November lows get swiped. So we'll do some pair breakdown, I think, and then we'll see how the week pans out. I've done a couple of pair breakdowns on some precious metals, oil as well, and a few pairs that I've never ever traded before. So I think what we'll do, start out with go out with, try and get a look on gold from a higher time frame perspective. Now the reason I'm bearish on gold is because I do believe that we've got a stop run and we finally broke the market structure here. We've got a really long wick that needs filling, and we are at momentum. Momentum is down. I strongly believe, according to my rule-based system, we've had a stop run. We had a confirmation of the market structure break because we had a higher low here. We should have went on to break this high. We didn't. We broke down. We've touched an order block. We've hit stops. We've broken market structure once again. So this is that long wick on the daily that we saw. There's an order block here which could cause a few problems. I wouldn't expect it to. Price may retrace from this level before it eventually drops, but I'm quite confident that we could look to sell at a 15-minute. I believe that's a 15-minute order block. Yeah, it's a 15-minute order block, and it's a fair value gap from this red line. So the wick of this low. So if we go back to an hourly, I believe we'll use the 15-minute order block and take the low out of the 18th of November low, which is quite clearly a void price imbalance, fair value into an order block. So basically that's as clear a chart as I could wish for, to be perfectly honest. I think the market's shown his hand with a market structure break twice. We've had stop runs, internal liquidity taken, external liquidity taken. So yeah, I would be looking to sell gold going into this week. This is oil. I've never ever traded this pair. I've never even looked at a chart. I was just doing this Saturday evening. Let's see from it. Now this is my higher time frame set up on the daily. As you can see, we've got market structure breakdown, highs created into return to origin, breakdown. Interestingly here, I spoke about this on Instagram Live. The markets had an opportunity to take this low. They left it, created a double bottom. That gave, for me, that gave the game away. There's one thing I'm not 100% sure about on the daily chart is I believe we ran into a daily order block. So I don't think we should go any higher. But one thing that's got me concerned is I don't like this high being there. I think we could use this order block. So instead of falling here, price could do that and then drop. I like to think that this daily order block will hold as it's a higher time frame origin block. So we go into a 1 hour chart. If that daily order block holds that we've got a, let's get rid of it, we've got a previous day's high, we've broke market structure, return to origin. That's the reason I don't think we'll go higher, because of this. I think we're going to drop down, and I don't believe that we're going to stop here either. I do believe that we could quite well see this order block tested. So I would potentially look at 60.79 on Brent oil to be tested, but my first target will always be the obvious previous day's low. So in regards to Brent oil, that's how I see it. We'll go through a few currency pairs. CAD should be interesting from a daily perspective. Right. How I see this pair working out is we've had a stop run, return to origin, strong move away into an order block, have a fair value imbalance and a daily order block. On the 4 hour chart we created a low, broke the low, rallied, created a double top already, which caught my attention. We're heading to discount prices on Fibonacci, which also leads us into a 4 hour return to origin, along with multiple highs, and what I also consider as a double top up there. So OrdCAD looks quite tasty going into tomorrow's price action. This pair seems to respect order blocks quite strongly. Here's another setup. We took previous day's low, rallied away, broke market structure, returned all the way down. If we can get the fib, yeah, wouldn't was it? To discount prices, and we rally away. This pair does react strongly to order blocks, and which is why I do think we should see, if this is correct setup, we should see a strong move away from the order block. So that is the outlook for OrdCAD based on the RTO setup. This is a chart I haven't marked out yet because I've just checked price action. I thought we'd break a pair down from start to finish. Now, if I was to ask to do this pair as I see it, I would immediately start. We've created a swing low. For some reason, the fractal pattern hasn't marked that out, but that's a clear swing if I've ever seen one. We've got a close above the middle candle and a low here. So with that being the case, from a 4 hour perspective, we can mark out market structure using that time frame, which is clearly there. From an hourly perspective, which is my preferred method of breaking market structure, we have the high of November 19th, we didn't come and take it because we've reacted from this order block. So potentially there is a number of blocks we could use. We could use this one, which is untouched, as this one was used by this wick, or we could come and use this block which is available to us here. And with false move Monday, as I call it, just around the corner, as it is Sunday today, I wouldn't be surprised if price broke through this candle and used the breaker, which was here, the last up candle before the stop run. I think we'll use this level. I do. I think we'll use this level, and I think we've already quite easily marked out our liquidity level, which, funny enough, if we break it down from last week, we had the previous day's high run, stop loss just above. We had a low, which was a swing low, must be violated, and price returned to the breaker. It didn't return to the origin block. Some pairs prefer breakers than others. I'm not a big breaker trader. I tend to use these. I would have, if that was me last week, I would have expected to see something along the lines of that. Personally, I would have hoped for that, but we've just reacted to the breaker. That's fine, and we fell off. But that's how I would approach the market immediately. Yeah, I tried to keep it as simple as possible. If we'd have took this high out, I would have been staunch bearish on this pair. With us leaving this high, I'm not convinced that we're going to run away without taking this liquidity level. So if I was to trade this pair, which I never have, I would be looking for some sort of Asia consolidation, a manipulation run, break in market structure, RTO, take the stops. That's how I think Canadian dollar, Swiss franc should operate. And let's take a look at another pair. High. I'd already marked out certain levels on this pair. Again, not a pair that I like to trade often. Odd pairs don't tend to react pretty well to certain levels that I mark out. Although I've had a good run with this swing high here, which confirmed with this candle close. The trade I was involved in was a potential return to this 4-hour block once the price broke market structure on the hourly. So if I can get to the hourly chart, I managed to narrow the price down. I was comfortable seeing this level broke, that bearishness was, the bears were in power. We returned to origin, and I was involved in a sell from this level, and I wanted to trade it down to the previous day, that day's low, which was 63 pips. And as you can see, I marked price down as structure breaks. You ran the stops into a block, carried on, but I was just happy with this level. But I did mark out higher time frame lows, 73,353, and it looks like we are going to head to that at some point. So basically, you're just moving your brick wall. You're looking for your structure breaks, stop run, just carry it down. I think our next target at least is definitely Thursday's low, after we run some stops, potentially above here. Could easily run RTO from that level, as in false move Monday, take the stops into the order block, fall off. That's how I see that pair. There's a high there, but if it breaks above this level, I would consider the pair bullish. I don't want to see that level. That's an invalidation level for me. I don't want to see that tuck. I want to see this hold. But if it did, there's a strong potential that we could take this double top out and run back into the order block. So with that being said, that's a few pair breakdowns. Forgive me for the first video. A tad little nervous because I've never really done YouTube before, and I did believe it was the best idea to reach out to the followers who were joined on the Instagram live, because the videos don't really last very long on Instagram live and a lot of people were missing out, and I wasn't too happy about that, because I like it doing these videos. I enjoy sharing what I've worked to learn, and I wanted it to hang around to see if people helped. I got a very, very positive response from the Instagram lives, so much so that we went through with the creation of the YouTube channel. So I think we'll cut it short there, just with the opening video. Obviously things will improve as time goes on. I will be releasing a new YouTube video based purely on this setup. I have done Instagram live on the RTO setup and the 3-phase rules that I use, but once again it didn't last long on Instagram live, got deleted, and people missed out, and I didn't want that. So I will be doing a very updated RTO setup. It won't be very long because I try to simplify the setup as easy as possible, so you can write it, your setup on the back of a business card, simple. That's how much I've tried to simplify this. So it won't be a long video, but it'll be informative and it'll be very, very useful. Very, very useful, and I think it'll go down well. It went down well with my Instagram followers who absolutely loved it. A lot of messages saying that they improved their trade and learned some new things just from that video alone, and that was only 20 minutes. So I think we'll do a YouTube video and we'll look at the response purely based on the videos will carry on purely based on the response I get.